Hi everyone, Stats Trader is here, and last week I had an opportunity to visit Irvine, California. I was at the Stephen Duck's 2022 Super Summit Conference. So if you guys don't know who Stephen Ducks is, for me personally, he is the best trader in the world. He took $27,000 and he turned it into over $20 million in the course of the last 7 years. In this video, I'm going to talk about the key takeaways from this seminar. I actually had an opportunity to go and talk to Ducks, and in this video, I'm going to tell you what question I asked him. So number one, most of the people who are short sell stocks, they use TradeZero. TradeZero is a pretty good broker. I have TradeZero myself along with Centerpoint Securities. But there's actually a new broker. So Regal Securities, they were one of the sponsors of the conference. They pretty much offer really low borrow fees, which is amazing if you're a short seller. So Regal Securities, they use DAS terminal. This is the same terminal they have they use in Centerpoint, and I use Centerpoint and DAS terminal myself. I wish I could open an account with them, but I went to the guy who is doing the presentation. He's one of the main people from the Regal Securities, and I asked him if they service accounts from Canada or if they open accounts for Canadian residents. Unfortunately, they do not as of yet, but he assured me that Canada is one of their target markets. They'll be working hard with the Canadian government to be able to tap into this market. So the main thing that we've talked about for the whole conference, the volume indicators. Let's suppose you're trading a pattern, and it doesn't matter what it is. It can be gap up short or extended gap down, whatever, or it can be even the supernova. And you have a max traded volume on the day, and this max traded volume recorded in the last 2 or 3 weeks. So let's say normally you trade other patterns and the average volume for these patterns around 100 million, but then there's one pattern that you're trading that stands out, and that's trading 400 million. This 400 million becomes your benchmark, or the max volume that can be traded for any other pattern that is going to happen in the following few weeks. This volume that was traded a few weeks ago, the max volume, becomes your reference. You use it as a reference. So this is the max volume that can be traded on this supernova. And once your supernova hits this volume, the stock will pretty much reverse, because the stock will hit its max volume that can be traded on the day. Another new thing for me was personally the formula to predict the volume that's going to be traded, the efficient way how to use it. So basically, let's say you have the same scenario. You have a supernova that's running for 3-4 days, and it has an extension of 300%. And let's say on the top of the day 3, which is the top of the supernova, you had 400 million volume. On the day 4, for a stock to go to a new high, it needs to trade over 400 million volume. The way you can estimate the volume that can be traded on day 4 is you take pre-market volume and you times it by 10. So that's the general formula how you can predict the volume that can be traded on the day 4. At this point, if you know that on the day 4 the volume is going to be less than the volume that was traded yesterday, it pretty much means that stock is shortable on the day 4. Another takeaway for me personally from this seminar was Ducks announced pretty much his 100% win rate strategy for 2022. So let's say you're shorting into resistance. You take your daily volume and you compare it to the volume at the resistance you're shorting into, and if this ratio is 1 to 10, it means that this resistance is pretty much unbreakable, and you can short into this resistance. And in 2022, this strategy had 100% win rate. Another thing that I've learned in this conference was the concept of the dollar block. And I know Stephen Ducks, he has been saying things about the dollar block for the last 2 years at least, but in this conference he pretty much revealed the maximum volume that can be traded for each market cap category. Suppose you have a stock that has a market cap, the beginning market cap 0 to 100 million, In this case, the maximum dollar volume that can be traded on the stock is between 500 to 600 million. This is the dollar volume, so which means the average price on the day on the top is multiplied by volume. So that's how you get your volume that can be traded, the dollar volume that can be traded on the stock. For example, if a stock goes from 1 to 5, then to reach this 500 million threshold at $5 level, it needs to trade 100 million shares. And once it hits 100 million shares, it take 100 million, multiply it by 5, and this is the max dollar block that can be traded on the stock for this particular market cap category. What does it mean exactly, a dollar block? So dollar block is pretty much the max amount of money that can be put in the stock at this particular price level for this particular market cap. So you know that once your stock reaches this point or this limit, you know that most likely the stock will not keep going up. It capped its dollar block volume for this market cap. So these were the following market cap categories and the dollar block volume that can be traded. So 0 to 100 million, the max dollar block 500 to 600 million, could cap between 100 million and 500 million. The max dollar block that can be traded is between 3 and 5 billion. 3 and 5 billion, which, remember, it's the average price on top multiplied by volume. If your beginning market cap is between 500 million to a billion, the maximum traded volume can be between 20 to 30 billion. If your starting market cap is over 1 billion, max dollar block that can be traded is between 30 to 40 billion. And there's only 2 cases when this actually happened historically. It was GME and AMC, so these 2 stocks. And again, you use the max dollar block to pretty much predict the top of the stock, where at which point the stock will pretty much exhaust itself and will not keep going further. The next point that I got from this conference was how Dux is using the neutralized area and consolidation area to maximize his profits. So first of all, what is a neutralized area? So neutralized area, it's whenever you have a consolidation, so whenever the stock is consolidating for 3 hours with a very low volume or no volume at all. According to Dux, neutralized area, so consolidation in the neutralized area, it's very dangerous to short past this point. This area is where buyers and sellers, they're agreed on the price level, and a stock, when it drops, it usually never surpasses this support level. So it pretty much acts as a support from my personal understanding. Now, another thing that I got from this conference was how to use the max fading percentage. So I know for those of you who trade gap up short, usually we would count, let's say, the area from the open to high, and that would be our risk area. But then maximum fading percentage allows you to determine how much a stock can drop. How do you use a max fading percentage? So let's say you're tracking stats for example, gap up short or bounce short. And normally you would have your low percentage and your high percentage, and you would use these 2 levels as a reference where a stock is going to go up and when it's going to go down, and that's how you maximize profit. Well, it turns out there's a more efficient way to do it, and that's the concept of the max fading percentage. So max fading percentage, it's pretty much the area from the top. So let's say if you're shorting into a gap up short, this is the area from your high into your close, and this area, it counts for your pre-market gap percentage or pre-market gain percentage. So you have your gap and you add whatever you had from open to high into the percentage. So this whole area becomes whole, and then you count percentage wise from the top of the high, from the high of the day, how far a stock went down to close. More efficient whenever you're shorting into the strength. That's where you know an average how far from the day high your profit should be. I hope it makes sense. Maybe in some other videos I'll show how to do it in Excel. It's really hard to explain just by words. Last thing that I got from this conference, on the day 2, I was actually really lucky. I went to the conference. I was the first person at the conference, and all the people the people who were setting it up with the hotel, they came to me, they showed me some kind of documents, and there was a Steven's name, and they were asking me questions like where to put this stuff or this stuff. And I told them, no guys, I'm not one of the people who started the conference. But later on in the day, I actually had an opportunity to meet with Dux. He was just standing there. He was in the corridor outside of the conference center. I came to him and I asked him the question that I've been looking for an answer in his videos for the last, I would say, from the last October. So for the last 9 months, this question has been on my mind. And I'm so happy I got to ask him. So here, what the question was. For those of you who subscribing to Doug's channel, you guys remember he did live trading on DVAC. It's one of the supernova runners that we had in October. It was one of the social media stocks, and Doug's pretty much, he was able to top the market, and he shorted DVAC at the very top. So my question was, well, first of all, how did you know that DVAC is topping? How did you know that this is the top? And Dux, he shorted, I don't even know how many shares he shorted, but at the end of the day, he made something like 6 million. And you know, whenever you have someone who made $6 million and he had recorded it, testifying that he indeed made 6 million in one day on this particular trade, you better listen to this person and treat everything that comes out of his mouth as pure gospel in trading. So this is what he told me. He said that he used GME and AMC maximum dollar block as a reference because this was the max amount of money that has ever been traded on the supernova stocks. You know, and AMC and GME, they fell into the category where their market cap was over 1 billion initial market cap, which means it was 1 billion before these stocks took off. So he looked at the maximum dollar block and used it, and he said, okay, this is the max amount of money, the max amount of volume that can be traded. And DVAC on that particular day in October got really close to this maximum traded dollar block. So first, he knew that DVAC is going to top, and then second, he told me that any supernova ends up with a gap up. So let's say you had a multi-day runner for 4 or 5 days, and then you have a gap up. So it opened the very last day when it's supposed to crash, it's going to open with a gap up, and then you're going to have a really strong push because you're going to have right from the beginning, right when people are right when stock opens, the market opens, people want to chase into the stock because it's on everyone's watch list, and it's also one of the top gainers for the day, and people want to chase into this stock. At this point, when everyone was just buying this stock after this gap, and Steven Dux knows that any supernova ends up with the gap up and a strong push, he pretty much shorted the top, the very top of this spike. So I asked him, you know that today it's going to drop just by looking at the maximum dollar block. How did you know that this spike after the market open was going to be the top of this whole move? And you know what he told me? He didn't know. He completely guessed that entrance. He knew that stock is going to drop today, and he knew that it's a good idea to short this spike after the gap, after the stock opened with the gap up. He shorted many shares, and then the stock went down. And he told me another thing. Whenever you have a large cap stock, so let's say with market cap over $1 billion, whenever it loses its momentum 50%, so let's say it drops 50% on the day, always a good idea to dip buy. So he used this first initial drop on DVAC to dip buy. After a stock dropped, he covered his shorts and he actually went long. And he has the average bounce percentage whenever you have a large cap, and it's pretty much a dip buy, and it works every single time. So he went long, and then DVAC had a strong push up. He covered his longs, and then he used the next consolidation area as his risk for another short. And he told me there's another statistics where once it hits your dollar block, you can short this first bounce into the close. So this is exactly what he did. And overall, at the end of the day, he made $6 million. And I was watching this recording from October. He actually was up almost $9 million on the day. But then I don't remember if he took some losses or something. But at the end of it, he finished the day with $6 million. And what's really funny about Dux is he's super chill. He's extremely humble. He's showing us his trades from 2021. And he was like, yeah, like I was trading this stock and I only made 3 million on this one and I really messed up. Come on, like he just made 3 million, you know, and people were like, well, yeah. And everybody just applaud, yeah. Even this very high level where someone can make millions of dollars on these supernova plays, people still are making mistakes and there's always room for improvement. It was a great conference. I'm so glad I went. We looked at the major supernovas. We talked about many things in trading and had a Q&A session with Steven Dux, and it was just amazing experience. And thank you guys so much for watching this video, and see you guys next time.